Good afternoon, everyone. Uh, First of all, wish you a happy new year, great 2026. Like every quarter, I do look forward to catch up with all of you, discussing about markets, discussing about our portfolio, how we have fared, some of our introspections, learning, all of these things. So let's get going. I'm sure you'll have lots of questions and suggestions. So let's get going. Uh, Flow would be as usual. We will first kind of take you through how we have done fared across our products, some of the changes we have made, and then we'll get into the exciting part of how are we seeing market from here. I'm sure that's the one thing which at this point in time everybody is kind of looking forward to kind of hear or know how do we see. So let's get to the portfolios. First set of portfolios are Flexi Cap portfolios, Carnelian Compounder, AIF, PMS, and the Bharat Amritkal. As you know that these are the Flexi Cap portfolios. Compounder started in 2019. Amritkal we started in 2024 and 2025 respectively. Amritkal 1 is a minimum 5 crore ticket. Amritkal 2 is minimum 1 crore ticket. That's the only thing. Otherwise, investment strategy, philosophy, everything remains same. Compounder is in PMS. All these four strategies has more or less similar portfolio. Of course, there's a vintage different and there's a reason why they were started at different points in time. But if you look at, I'm very happy to report that last year, 2025 was a very difficult year. All of us know that. And despite that, all our products in this category have done very well. Our compounder AIF was up 17%, PMS was up 19%, vis-a-vis the index of BSE 500 of 7%. Amritkal was up 7.2%. Even in last quarter, if you see across all funds, we have done well. So I think this has been a good category despite having here 50% small and mid cap contribution. We have kind of come out very well. And all the funds, if you see, average alpha over, since inception has been a great number. Generally, all of them are, delivering very good returns. Uh, Second category of the fund is shift strategy, which is again, as you many of you know that we started in October 2020, which basically primarily invests into manufacturing and technology. This is primarily mid and small cap strategy. This strategy had a bit rough last year. On a 12 months basis, 2025, it was down 3.5% versus the BSE 500 of 7.56% positive. Last 3 months, it was up versus BSE 500 of 5% positive. I know many of you have asked this questions around this, so I will delve deep little bit, giving you more detailed color around the performance of this strategy in just a bit a while. I have prepared few slides. But good news is that both these strategies since inception over a long period of time after this correction also has delivered superior return. Shift PMS have given about 34% CAGR. Structural shift fund is up about 22% CAGR. So in that sense, they are very good returns. But having said that, I will discuss with you more in detail about shift strategy performance just in a few minutes. Uh, Bespoke again has been, which is a concentrated bet, the last 12 months up 7%, last 3 months 5%. Again, Bespoke primarily it is a mid and small cap portfolio. So there are, of course, some large caps as well, but 90% portfolio would be mid and small cap. Contra strategy last year was almost kind of flat. Again, this is a 12, 13 stocks portfolio, largely large cap buys in this, and as a contra business, contra kind of performance. Since inception, it has done well. In last 3 months also it's done well, but on an overall year basis, it's been kind of flat. We are not overly worried about this strategy because this is nature of the strategy where our even guided return over there when we launched the strategy was 10 to 12% return. So it's in line with, it's doing far better than that, except I think probably last 12 months. Even if you look at, when markets bottomed out in March, post operations Sindoor, a market had kind of panicked and bottomed out from there. All our portfolios have rebounded very well. except the shift strategy, which has rebounded only, slightly lower than the market. Till last quarter, it was actually, much better than market. If you see when I make a presentation to you, last quarter, it was doing far better than market. The bounce was far better. But in the last 3, 4 months, we have had some, rough movement. I will again have explain you. But in general, if you see resiliency on our portfolio has been very good from a rebound from the lows across all our products. This is the framework I always share: faster, stronger, cheaper, meaning our earning growth is faster than the benchmark. As you could see that revenue growth of benchmark is 11%, earning growth is 14%, but our portfolio expected earning growth is, way upwards of that. ROE is far better than the benchmark. Instead of 14.5%, ours ranges between 18 to 19%. Debt to equity ratio, which is a measure of risk or strength, when benchmark is zero point 0.6, most of our portfolios are kind of on a console basis, debt free, which again is a very big deal. On a peg ratio basis, to the benchmark, the valuations of our portfolio, while markets are at 1.5, we are at 1.2. Beta of all our portfolio is zero point 0.9. This is again, it's a measure of a risk. So if you see benchmark against BSA 500, which is a primarily large cap index, all our product, which has a fairly large component of mid and small cap, still the beta is zero point 0.9. So this again clearly demonstrates that, how vis-a-vis the index, we were able to manage risk quite well over the years. Uh, so this is again a little bit of color on the portfolio construction. Amrit Kal Fund, broadly five broad opportunities said we are targeted: BFSI, consumption, manufacturing, services, and infrastructure. We have fairly large weight in BFSI. Consumption, we increased quite a bit this year, before GST cut, and I think that has kind of been played out. Manufacturing 23%, services 15%, and infra 8%. Our largest holding continues to remain Aditya Birla Capital, which has done fairly well. When we started first time, we bought at 100 rupees. Today it is done at around 350 odd rupees. Of course, we have continued to buy over the years as we have got more money in new products, because our conviction on the stock remains. Laurus Lab, Biocon was a recent end. Laurus Lab again is a large position for us, and kind of done very well. Generally, portfolio quality, I'm very happy, based on, I'm sure all of you have a detailed portfolio, but I think these are some of the top holdings. And the earning CAGR, price to earning ratio, ROE, all good characteristics of the portfolio, as you know, what I talked about. This is again, compounder portfolio, pretty much similar portfolio, not a lot of difference. So, except that, in this we have Paytm, which turned out to be very well for us this year, which unfortunately could not buy in Amritkal, but, in this strategy it's done, and that kind of determines a very big difference in terms of performance of compounder in Amritkal. But that kind of variation can always happen. But generally speaking, otherwise, this quality of portfolio continues to, we have continued to very, very happy and bullish on this portfolio as well. So some of the, again, I was, contributor in our portfolio are these: Aditya Birla Capital, or as RBL, Canara Bank. I mean, these are all stocks which have contributed in our portfolios, over last 12 months. In Shift, Loras, SRF, Shelly, BHEL, Bricol, Hyundai, Sanatan, Larsen Tool, all of them have contributed in a very, very handsome way. Same thing on the Bharat Amritkal. These stocks have contributed, in a big way. Our big winners this year has been, across strategies, Aditya Birla Capital and Loris Lab. Was for. And when we bought, both of them were, there was significant underbeliever in the market. We were the only ones who bought, and both of them have turned out to be very big winner. And in both of them, we took a sizable weight. So, that will tell you that how, when we are convinced, even market does not believe in that, we have taken high conviction, sizable bet, contrary to the market view. And that obviously determines the significant, outperformance or deviation from the market performance. Some of the stocks which have really given us a pain, which I'm sure that everybody has their own share of thorns, and we do have. compounder had signed, we bought the stock and suddenly CEO left and there was a big chaos. Stock went down 20% after, just a few weeks after we bought. Kirloskar Pneumatics, again, business continues to be good. They've been guiding well, but stock kind of took in line with most of the mid-cap bashing. Tech Mahindra, business continues to be well, but it's kind of taken a beating. Container Corporation, Deepak Nitrate, they are some of the, well, good news is that we didn't have a very large weight in each of them, but still it has given a pain in compounder. Shift Strategy, Concord gave us a very big pain this year. It came down, it went as high as 2400. Of course, we bought it 15, 16, 1700, but went as high as 2400 and then came down to 1300. So it's given quite a bit of pain to us. PCBL, again, we bought quite some time ago at 100 rupees, went as high as 1500 rupees and came down. So this drawdown has given it quite a bit of pain this year. It's not that we bought this year, but Shift Strategy, a lot of, good gain was taken away by that. We continue to remain invested in the company as we believe that cyclical downturn has happened and we will see it coming back. Anup Engineering, we continue to remain invested. Good company, but it has also seen a drawdown in line with the mid and small cap correction. Quick Hill, again, we had a change of CEO, which has given quite a bit of a pain in this. We bought it because of CEO and that CEO left. So right now, the appointment of CEO happened. Till then, stock has kind of remained under pressure. So, these are some of the stock which we have got, same thing in Bharat Electricals, Science, Genco, SpiceJet, Suraksha, our system. They have kind of, some of them we have continued to remain invested, but they, of course, give us quite a bit of disappointment in our portfolio. Some of the recent entries are Indigo we bought when the stock fell post the entire Indigo crisis. Tata Motors, we believe CV cycle is an uptick. We bought United Spirits, we bought LG Electronics on listing, we bought. We exited Mahindra and Mahindra and compounder. In the shift strategy, we bought Tata Motors, United Spirits, LG, Syngene, Garware High Tech. So these are some of the entries we made and exited Hyundai Motors and SP Apparel. Again, same way in Bharat Electricals, you could see what some of the entries and exits. So, and these are, some of the names you will find common wherever we think the portfolio mandate is same. We replicate across the products and wherever there is not, we can avoid them. Now, coming to the, I promised you that I will delve deeper into the shift strategy because we have received queries from some of the investors rightfully that why we did not, because our investors have high expectations from us. I totally understand and I respect that. And as a result of that, I have given it this time around special section on the why we have, what is the, to give a perspective around what is happening in the shift strategy. So as you know that this is a primarily two big shifts, manufacturing and technology. When we said 75 to 80% manufacturing and 20 to 25% technology investors stocks we will play, and that is what we've been following for last 5.5 years. Some of these holdings, that, and now here I would say that last year, first I will take whole calendar year and last 3 months. So whole calendar year we were down 3.5%, and last 3 months we were up about 4%, 1.4%. Now keep in mind, we here the benchmark is BSE 500, total return index. As per the SEBI, when we launched this strategy, we had first proposed mid and small cap index because it is a mid and small cap strategy. But because SEBI has this rule that we can use only one index irrespective of the nature of the strategy. It's a funny rule, but it is what it is. So we have to use that. So if I kind of contrast vis-a-vis BSE 500, of course, it's a huge underperformance, but that's not a fair benchmark. The fair benchmark is the mid and small cap benchmark, whatever you can take, mid cap, small cap. So in that sense, the underperformance is not very stark. It is, of course, if I compare with small cap, it will be fine. If I compare with mid cap, it's a underperformance. But generally, by and large, we are not very worried about this kind of underperformance. In the sense like it's not that it's a very out of the, of course we're worried, but it's not out of the line big underperformance, especially when the strategy is done so well over last 5 years. The first year of meaningful this thing. Now, let me give you a little bit insights into what is in our hand when we select our portfolios. What is in our hand is the earning growth fundamental exposure study we do. Now, what I have put it here is the earning growth in portfolio. So if I look at the earning growth in the of the last quarter, or and this is pretty much similar of last year. So I'm saying these are our shift earning growth this quarter was 17% EBITDA growth. Shift fund was 26% EBITDA growth, right? And in the flexi cap multi cap fund, which is compounded Amrit Kal fund, it is anywhere between 10 to 14%. So if you look at last year, given the environment, large cap and kind of did very well. So that's how they did not get derated. They minorly got re-rated. As a result of that, our funds have performed in line with the earnings growth and little bit better, right? Or broadly in line with earnings growth. But in case of mid and small cap, because of the broader macro environment, we saw de-rating happening. So despite earning growth, we saw our portfolio not doing well. This is basically classic de-rating, and this can happen in a shorter term, driven by the primary macro environment. This is a very important data point to see because that explains to you at least the fundamental nature of the business is fine. There's nothing wrong on the fundament. As long as the business is growing, business is fine. You will come out well on the other side. And that is what matters because you can't control market volatility. That will always happen. Like, my most funniest example I give is Aditya Birla Capital, one of our large holding. And pre-tariff, in February this year, uh, Aditya Birla Capital stock price was 225. And the tariff announcement happened in the panic. In that panic, stock price went down to 150 rupees. Right now, Aditya Birla Capital has nothing to do with tariff, right? But it went down. And today tariffs are still around the stock price in the same year is 350 rupees, right? And that time also when it went down, we looked at business is fine, we stayed put. Whatever little more money we had, we bought more, but otherwise we stayed put. So this is the nature of the market when things are put down, you always, kind of feel, so whenever market environment can in short term distract, but our biggest lighthouse or our anchor is business fundamental, earning growth, how the business is progressing. As long as that is there, we are happy to withstand volatility. But this slide shows you that businesses are fine, but market sometimes can kind of give you more return than businesses are doing, and sometimes less return than businesses are doing. And that's the nature of the market. Also, if you see, we had many winners in this year as well. Lawrence Lab was almost kind of double from this year, but when we bought at 300 rupees, from there it is almost 3x. Our system was up, Pale was up. So all those stocks were up, and at the same time, last part of the good work was undone by some of the names on the right hand side. You see, but that is Quick Heal Science. Some of the names I gave you earlier also, but they took away, some of the good work of our portfolio. So in that sense, our portfolio became half great stocks, half not so great stocks. And that is what kind of colored the whole performance of the share strategy. What are we doing now? So, we say that we believe that large part of the performance has been driven by the broader sentiment in the market. The de-rating in the entire mid and small cap space impacted our portfolio also, despite earning growth being there. We continue to remain very convinced about the shifts, namely manufacturing and technology. Very often we get this question, do you think manufacturing story is over? And our answer is no. It is a decadal theme. We continue to remain, India's manufacturing also is undergoing. It will happen over the next 10 more years because we are still, long way in that journey. Of course, intermittent cycle will come in the sub segments of each manufacturing, like whether it is chemical, automobiles, or auto ags to pharma, to each of them will have sub cycle, and that is our job to play out those intermittent cycles, positive or negative. But theme will continue to remain very, very positive. Like we sold most of our chemicals, what we bought in 2020 and 2024. And last year we kind of added a little bit. Still, we have not fully bought, but we added a little bit. So, in 10-year cycle also there will be many sub-cycles or mini cycles. You have to play them as well. And that we will do, but our conviction and theme continues to remain there. We have critically reviewed our portfolio over the last 3 months, barring a few small changes and switches. We think current portfolio continues to, hold in good stead. Whenever environment changes, you will see a good positive outcome. Of course, we will continue to make changes wherever required as per our normal course of business. That does not change. We do not want to make any changes because there is short-term pressure on the prices. Our only guiding star is that how's business doing, how's management doing, and if something is changing, we will definitely what is the risk reward at this price? Would I buy the stock at this price or not? So all those things we keep reevaluating all the time. But one more thing which we are trying to do, and I want to keep you posted on this. We are broadening the mandate of the portfolio only from manufacturing and technology, include other shifts which are beyond manufacturing technology. And I'll tell you the context of this, why we are doing that. See, last year our view was very clear that this year, BFSI will do very well, and one point in time we debated should we buy some 10, 15, 20% of BFSI and shift also. Then we took a call that because mandate does not permit, let's not do it. And we spoke to our partners also that point in time. We got a mixed view. Now, same thing we did in last couple of months, asked some of our partners, clients, and most said, no, no, you should do what strong view is. No, broaden the mandate. You can include other shifts, what you are seeing. So now and we will send a communication out very soon, early next week, saying that we will, so that at least, of course, our belief in manufacturing technology shift continues to remain that, but we will have some portion also allocated to other shifts if we feel those shifts are playing out. So it's not a compulsion that we have to play others, but we will play. So we will not be bound by a limited set of, if our view on other shifts are possible, we will kind of include them in that. That is the one change going forward we will make. Hopefully, that will help us to kind of even participate in the other shifts as well. Like, we debated last year, Paytm and other NBFCs, can we buy? We could not buy, right? So if we had bought that, probably the performance would have been very different. So, but we continue to remain that it's a good portfolio. It will do very well. We had seen a very similar phase post Ukraine war for about 2 quarters. It was not for a whole year because market rebounded second half of the in post September 2022. Similar situation we had seen, and then which we recovered, and 23 turned out to be a great year for shift strategy as well. So we think it's a passing phase. I kind of assure you don't need to worry. We are doing everything in our control to take care of your portfolio, your money in the best possible manner. We will leave no stone unturned to do our best to deliver what we are supposed to deliver to you. So I can assure you on that. You don't need to worry. We are worrying all the time. Now, coming to, I think, market outlook, which I think, so let me set the macro backdrop where we are. And I know a lot of you are right now concerned about the markets. We get number of questions all the time from our clients, our partners, that what are you seeing about market? How are you thinking? Because today there's a lot of negativity, around and of course, rightfully, there are many concerns around us. We are bombarded with many negative news all the time. So let me first set the backdrop and say that, see, every couple of years, this happens. Post-COVID, 2021 turned out to be a great year, and we started 2022 on a great note, and then Ukraine war started, and environment turned out to be very bad. Over the next 6 to 8 months, extreme amount of pessimism happened. Everybody was worried. Mid and small cap corrected significantly. I think about 10, 11% negative year it closed. And everybody was worried. And in September 2022, I remember writing a note saying, build this vintage. In our quarterly call also, we had said that time that this vintage will help you hold in good state. Over a period of time, it will do well. Today also, that vintage is kind of coming out very well, helping, right? So we think that 2025 was very, very similar to 22. And if you see September onwards, market started recovering, and 23 turned out to be a great year. 24 first half turned out to be a great year. September 24, when market peaked out, right? Now, let me see what changed that point in time. And I'm building so that you get the whole perspective about how markets played out, right? So, uh, in March or April 2024, previous RBI governor, in order to defend rupee, he ended up creating a huge negative liquidity deficit in the system, almost 3.5 lakh crore. And that point in time, there was a general election also happening in May 19. And during elections, government does not release payment, so that also created huge amount of negative cash flow for companies and economy. And thirdly, that time RBI governor had come down on heavily on unsecured loans, so credit supply slowed down. So it created huge liquidity squeeze, and that impacted corporate earnings with 2 quarter lag. So September market peak, September earning was good. December 24 earning was bad, right? Because of this whole macro change in the monetary policy. new RBI governor came in December 24. First thing, he infused liquidity, he cut interest rate, and gave a very growth-oriented guidance. And January, February were looking good. And then we had Pahalgam and Operation Sindoor, which kind of clouded us out, and war kind of situation happened. And then the whole new tariff thing after Liberation Day, concerns started happening, huge volatility over the next 3, 4 months. We all were talking about tariff, tariff, tariff. So while the macro policy environment on the monetary side was working out, we had this whole global and geopolitical concerns started bothering us, and that kind of obviously took a toll on, especially on the mid and small cap space. People were kind of worried about and all those things, and then government came out with a fiscal stimulus, GST cut. Prime Minister announced on 15th August from you know Red Fort, and then followed up later after a few months with a big GST rate cut, which kind of created cheer in the market. So you had a fiscal stimulus. So I know that kind of started having a positive impact on the corporate earning. But so one side you have this whole improving domestic macro fundamentals, and other side you have a very big global unstable geopolitical scenario, tariff, and a lot of concerns at the global market. And right now, what we are saying is a big tug of war between these two sort of factors, and this is the backdrop backdrop we need to understand. And I'll take you some of the factors so you understand in each of them some of the data that what's happening, and how to decipher from that. All I say that don't listen to me, but listen to data, listen, see what is happening, because when everybody is confused, there's a lot of views are there in the market. All you are supposed to do is cut the noise, look at data, look at facts, and then take a dispassionate view. Because noise always clouds our mindset, our intellect, and hence we have to be very, very careful about the whole thing. Right now, 2025 year, we all know that 2023 we had a great year, 24 we had a great year, and 25, while Nifty was up 10%, mid cap was up 5%, small and mid cap was 6% down, right? More importantly, if you see number of stocks which were down in mid and small cap was humongous. We had almost two-thirds stocks, down, negative. Sometimes, index hide the reality. Because heavyweights, if they are up, they can kind of just hold on. But you could see there was a very big pain in the broader market, and that you must have felt and heard. And unfortunately, a lot of people participate in the mid and small cap, and that kind of created a big pain. And this shows you that how in each category, there was a median drawdown. Stocks were down 23% median. I mean, many stocks are down 50%, 60%. Especially the Fed-driven stocks in defense, railways, EMS, and many more, where obscene valuations were built, and we saw how the broader market weakness continued in this whole space. Also, by the way, last year India was one of the most underperforming market globally. India was great outperforming market before this year. In 24, 23, 22, 21, all these years, India was, beating emerging market, all the market by a handsome margin. But this was first year, if you look at India underperformed, anywhere between 15% to 40%, depending on which market you take. And entire emerging market basket, we underperformed by 28 or 29%. I mean, that's the kind of underperformance India had last year. So basically, a lot of money went also into other emerging market where either because of undervaluation or things picking up on that side, and that readjustment happens very often. So that was the year we saw, but we are sitting on the backdrop of a huge underperformance. Uh, but like I said, the fiscal stimulus is there, monetary stimulus is there, and rarely, by the way, it happens when these two are there and you are sitting on a market which is not performed, right? So it will be largely clouded by the macro concerns, but you have whenever equity market cheer up whenever there is fierce fiscal and monetary stimulus, right? Now that cheer partly is getting punctured by that. But having said that, that cheer is impacting economy at the grassroots level. Why did we see strong GDP growth coming? At 7.5 and 7.6. It is because I think all this monetary and fiscal stimulus is at work. And that is a clear indication that economy is well and fine. If you look at life insurance premiums last month came out, you have seen 21 to 24% kind of growth. which again shows that, there's a very good enough growth happening. Look at credit growth. December credit growth came out to be at 14.5%, right? Which I think after long it has improved. Now that I think clearly, showing that economy is on uptick, economy is on revival, there is demand which is keep picking up. But all these things, like in terms of by the time earning gets reflected, capex cycle is picking up. You can see, we are beginning to, and capex cycle, our view has been always been strong. But even from that level as well, you are seeing good pickup which is happening in this all economic sectors driving large part of the capex. As you see, across the board, we are seeing capex happening and data center to energy, massive investment happening. Reliance announced major investment recently. So I am not at all worried about the investment cycle. I know many people create, and this investment cycle, whenever it picks up, it has a huge multiplier impact on the economy. These are a number of companies with more than $100 million capex. So if you see it, they continue to sort of rise consistently in that, and that's again a sort of good news. These are some data I'm showing that, which kind of points towards the recovery. Earnings upgrade is continuing to be very, very good. 13% of the company will see upgrade. And if you see the right hand side chart, that's even more important chart. That mid and small cap earning recovery is far, earning upgrades are more. So if you see, it's kind of balloon. So mid and small cap earnings are kind of, picking up quite well. And that's the, so you will, and our view is that corporate earnings have picked up last quarter also. I think this quarter also you will see good earning growth. That will only be on the upswing, right? So you have a situation where macros are improving, earnings are getting better, but of course market prices have corrected. That's the kind of backdrop we are talking about as far as the fundamentals are concerned. And we are not seeing any concerning data as far as the fundamental factors are concerned. And that's the kind of good news from again fundamental perspective. Liquidity, domestic fund flows continue to remain strong, and thanks to them, we have survived the massive selling of FIIs over last 12 months. Also, 2025 turned out to be negative year. I was hoping that this year we will see positive flows, but I will tell you what has happened, and hence, so at this context, you must remember why we are seeing this outflow. So 80% of the flows in India is emerging part of emerging market basket. Only 20% is a direct, as a direct asset class. Now, whenever Fed raises interest rates, FIs pull money out of emerging market. Whenever they cut interest rate, FI put money back into emerging market. Now, post-pandemic, when the Fed started raising interest rates, money went out of emerging market. It went out of India also. But when money was going out, India was significant overweight. Significant overweight. I mean, as high as 25%. But still, at that point in time, no other market was doing very well, right? So that continued till 23 and first half of 24. And in 24, Fed paused the cut. Fed said will, and in fact, there was one cut also done, for I think one small bit. That time we saw small positive flows also. By then, China started doing very well, right? China was staying extremely cheap and positive sentiment around China bit. Now, when the positive sentiment was building, what will you do if China is significantly underweight and new money is not coming? You obviously have to sell that overweight position and go to underweight position, and that is why nothing changed in the emerging market flows. A lot of money went out from India and went to China and emerging market, and it is also partly reflecting into the performance of all the emerging market, which I showed it to you. Right, so it was the right thing to do, but as a result of that, India lost money. According to us, that adjustment is by and large over. Right now, as the Fed rate cut happens, you will start seeing the flows towards. So we remain positive in 2026 that you will see flow coming through India market. It may be small, it may be positive, but again, extent will depend how fast Fed cuts the rate. That we will only know next year. But I kind of expect that at least first phase you will see slow down the outflow, and then you will see it turning into positive. So I would not be surprised if we get $5 to $10 billion of positive flows also in 2026 calendar year. And again, FI holding is all-time low. When I started my career, it was always 22, 23%, and it's kind of has come down to 17%, and good news is that the domestic holding is doubled. So I'm actually, in a way, I'm very happy that, domestic investors are participating in this wealth in a meaningful manner. Earlier, otherwise, it was always the case that, foreigners were participating in the market and domestic investors were not participating. So, but good news is that today, if I were to look at of FI or foreigners holding at 1.6% is far below than the equal weight position of 3.5%. Someday it will reverse. And when that reverses, we will see a liquidity deluge. Now, whether that reverses 6 months, 12 months, nobody knows. But one day it will have to reverse. And that point in time, I think you will see big liquidity deluge coming, and that is the perspective this chart kind of shows you. Valuations, I think we are by and large in line with, we are not cheap, we are not expensive, we are in fair zone. Our last 15 months, when the markets have corrected, earnings have gone up, and as the recovery is happening, I think at 2021 times, I think Nifty is fine. Um, mid and small cap corrections have sort of significantly gone down, and we think that it's not worrying anymore. Yeah, and especially some pockets might be overvalued, but a lot of froth has got clear. And I think going forward, and we are beginning to see some interesting opportunities as well. Market mood index is kind of quite somber, as you can see from we have moved from extreme greed to extreme fear in last 15 months. This indicator in September 24 was on the other side, toward the extreme greed. And I think that clearly shows that how, mood has swung. And we all know from our experience that what happens when the mood swings to on the other side, whether it is opportunity or risk, we all know that, how to interpret that. Let's again look at the history that whenever in this we took out from global financial crisis, that whenever there is a negative year in 2011, 2013, 2018, 19, it's usually followed by a good strong year, right? Even 23, I was talking about the 22, which was a similar year post pandemic, where there was a uh, and this, by the way, this is after a recovery in October and November. The last three months of 22 was good. But if you were to take in July, August, it was pathetic. It was bad. So, but what I'm saying is, but after that, 23 turned out to be a good year, 24 turned out to be a good year. So, given current concerns, it might not be 23 kind of year. Definitely believe that 26 will be far better year than 2025. And this also kind of partly validated by the history in the past. So, that's how we kind of believe. And like I said, macros are improving, fundamentals are improving. We see lots of positivity. And keep in mind that if I were to assign a probability, there are three potential scenario. If the geopolitical conflict builds, let's say, in a bigger World War III kind of scenario where some people are assigning for probability, you know, that scenario we do not know how big it can, how bad it can be. I would say it's a very low probability scenario, but it can happen. Who knows? In that scenario, we might see, the current environment continues to remain positive, continues to remain worrisome. More likely scenario, what we believe is that 13 to 15% earning growth will come next year, and that would be probably more likely how output of the market, plus whatever alpha we can generate. And a third very extreme scenario would be where we can have a 23 kind of year and a very good comeback happening. I would assign 30, 40, 30% odd probability of that happening. So this is how broadly one should look at. And I always say that risk always comes from unknown, and unexpected sources. Only way to prepare for the risk is quality of the portfolio. We always focus on that. That is our quality of the portfolio better? Can it survive a bad market? Can it survive a bad cycle? Because cycles is not something in our hand. We and when in a very long wealth creation cycle, there will be cycles, there will be bad periods, there will be tough patches. 2025 was that tough patch, and we think that that is behind us, thankfully. and painfully. I'm sure all of us have gone through the quite a bit of pain in our minds and in our emotions. Nobody likes to see volatility and negative news flow, but that's the nature, and we have to go through that. Uh, what can lead rally from here? Anything, because markets always rise on the legs of skepticism. 2022 September, there was no news flow, but market kept on going up. So, but triggers could be a US India trade deal. Trigger could be a great earning recovery. A trigger could be, money flow coming from FPI. Trigger could be, Trump changing his mind and becoming a peaceful person and stop tweeting every day. Trigger could be anything, right? So, but all we believe that we are fully invested. We think the risk reward of remaining invested are far more in favor than not remaining invested. Only when the smooth sentiment and everybody is kind of worried, bearish, and concerned, that's the time when you get good prices and good investment opportunities. Uh, Risk, like I was saying, there could be risk of Six Sigma, risk of a world war kind of situation. I would assign a very low probability to that, but who knows? Anything can happen. Tariff uncertainties are there, geopolitical tensions are there. So, all those things are usual risks are there. We all monitoring them regularly. But, like I said, new risk can come from unknown sources. These are just known potential risks. But usually my experience tells me the potential known risk never bring risk. It is always unknown risk which brings risk. So, I would say that be prepared for that. Finally, I would say, like I said, that you have to go through this painful period. Our portfolios across last 5 6 years have done very well. We delivered good alpha. This year we delivered great alpha in our flexi cap funds. Our shift strategy, which is the mid and small cap, had a tough patch. I'm quite confident we will come out of it on the other side very well. Our team is kind of burning our midnight oil to deliver that, figure it out. But obviously, you have to go through the market pain as and when they come. Yeah, so it always markets test investors' resilience and patience. So it's we are trying to be patient. We are trying to be resilient. Like the legendary investor Rakesh Jujunwala used to say that to enjoy a 10 bagger, you need a stomach to hold while it halves, patience while it doubles, conviction while it doubles again, energy while it doubles again, and courage while it doubles again. So identifying multi-bagger is easy. Real challenge is holding them through the volatility. Volatility always tests conviction. Volatility tests your patience, and we believe that we're trying our best to stick to the basics, stick to fundamentals, and we hope that we are able to live up to your expectation. And our idea is a very long-term approach in creating wealth, and which is what we are aiming. Thank you very much. Happy to take questions from the audience. So I would suggest that uh, not to get into too many stock-specific questions. I will avoid them. If they are portfolio stocks, I can still answer that, but outside portfolio, I would not want to question. I have no view on gold and silver. I know that is a very common questions. I think best of the returns are behind, but I am no expert, so I would say that. And please keep your question crisp. So maybe I'll quickly go and Pal, you can ask the question, please unmute and ask the question.
Hi sir, how are you?
I'm
Sir,
good. How are you?
I had one question. Like few of the mutual funds that I have, okay, which are into large caps. I think currently can we shift that funds into shift strategy or some other strategy which are into small caps? Like valuations are very cheaper on a small cap side.
I think say look again, where you want to shift is the call here, but I think when market turns back, shift mid and small cap will do very well. And we are finding good ideas where there's earning growth, conviction is there. So, and I'm sure everybody is finding. So, I think if the environment changes, mid and small cap will very do well. Now, you assign what probability you assign. We think there's a high probability. The only situation when they will not do well, according to me, if global geopolitical environment worsens from here, right? Again, I said that I will see a low probability of that, but who knows? Hence, you can take that call based on that.
Sir, we will send the funds that you have to take a call when to dilute it. Thank you, sir.
Yeah. Uh, Yes.
Hi, Vikas. I think my question is getting echoed in the chat box as well, more on the IT sector. What would be the kind of triggers that you're looking for that are giving you conviction that this is still a sector that may result in a mega trend, structural shift sector to invest into?
And I think, see, we have said this in the past also that very often people confuse IT sector with IT jobs. Every time there's a technology transition happens, IT sector has only grown. Whether it was Y2K, during Y2K time, it was $10 billion. Today it is $200 billion. Whether it's ARP, digitization, cloud migration. So, uh, that transition, creates more opportunities. Now, you may not employ those many people if AI were to happen. So hence, but sector will grow. Order book of all the companies is growing very well. Now, execution cycle is picking up, right? Within that, small and mid cap companies will grow even faster. See, every cycle, new companies grow. Like most people don't know this. Many companies like HCL Tech, Persistent, LTI, LTTS, all got big scale up from 10x to 40x between 2009 to 20, right? So every cycle brings new set of companies, and that is what we are trying to kind of get there. So we don't. I'm not saying all the large companies will do well, no, but we are not bearish on and a lot of technology, new set of companies will come. It's not necessarily that only all IT services are technology. Technology has other set of companies also. So that we will like to play this. Uh, I'll just take some questions for the power sectors. Hopefully, if somebody questions are answered, then they can kind of raise. Oh my God, there's lots of questions. I'll take some of them. Um, Power sector, we are quite positive because uh, uh, there's a global because the data demand, power demand is growing significantly in last 10 years. There was hardly any investment in the global power generation and transmission and distribution. So all of that is going to get rebuilt over the next 5 years. We think there will be a good, uh, growth in the power sector and investment. Uh, want USD 90 be enough case for FI to return? I think only currency does not determine the allocation of a country. Emerging market allocation gets determined by the rate cycle in the US. So if India was an independent asset class, yes, they will make an impact. Within emerging market, people can take underweight, overweight call based on the currency of a country. But broader flows come only when the interest rate cycle changes. Uh, what do you think can be impact of new labor code on earnings? I don't think these labor code have immediate impact on the earning. They are more improving the ease of doing business and opening up the risk appetite of the entrepreneurs to take the risk, saying that now no more those hurdles are there. So they don't have any immediate impact, but over a period of time, it helps this investment cycle and overall growth of the country. Uh, EMS companies, I think again, sector is good. A lot of corrections happened. We are right now working on some of them, evaluating. But our view is that most of the EMS companies are over expensive, but some of them could be interesting. We haven't bought so far any. We have not bought anything in last 2 3 years on that space. For a new investor with 1 crore liquidity, will you recommend shift or compounder with a long-term perspective and why? I would say that I think, compounder Amritkal would be better because there you get anyway a flavor of mid and small cap as well. Many stocks, as you would know that, which form part of manufacturing technology are common in Shift and Amritkal and, compounder. So I would say, you would get a complete, rather than splitting into large cap and mid and small cap, you put in one, you get all the flavor across all sectors. From a long-term perspective, I feel could be interesting. That does not mean that our conviction shift is not there. If you are an investor who can take mid and small cap only risk, please buy in large book there. But generally, assuming that you are an investor which requires a stable and sort of multi-sector, multi-cap exposure, Bharat Amrit Kal compounder is a great strategy. Do you sense any capital gain budget? I don't know. I don't think so. What's your feedback on solar and renewable sector? Solar and renewable, we have kind of avoided because we think that while valuations have come down significantly, but there is significant overcapacity possible. We are evaluating some of them very closely, but we have still not been able to convince ourselves, given the lot of capacity coming over the next couple of years. But we don't. I mean, we only started evaluating after the significant correction. But still, we think that we have not firmed up our view on that, whether it is still given there is a lot of capacity coming in next 2, 3 years. CDMO sector continues to remain well. Our large holding in Laurus, Newland, Biocon, Syngene, all of them are indication of that we have high conviction in the sector. Uh, so we have defense and electronics as a sector. I think, if you see current geopolitical has led to a very big change in the rearmament of the entire all globe. All countries will invest huge amount of money in defense in building their capability, and that will unleash a good growth in the sector. Now, of course, which company to buy, how to buy, where to buy, only the matter, because even if you get a sector right, you may not get the company right. So it's very important to get company right. Sometimes you get the company right, not the sector right, still fine. But if you get the sector right, company wrong, you can't make money. So hence, you have to be the sectoral view is positive, but you have to be very careful in the company. Biocon is a large holding in our portfolio. Uh, yeah, I mean, so I think it's a very contra bet we have taken. I know that right now many people don't have faith in this company. We have done a lot of detailed work, just like how we did in Loras or Aditya Birla Capital. Uh, Last 7 years, company has kind of not done well. They did an acquisition which created financial leverage in the portfolio. Recently, I mean, all those things have kind of got cleaned up. The holdco discount is going because they were, made by Biocon Biologics as an 100% subsidiary. Earlier, there was an overhang that what if that goes IPO, what will happen? All those things were going on, right? But we think after now, so in last 7 years, when things were worst, stock price was lowest price was 300 rupees. Now we are, based on our work, we think there's a good earning growth coming over next 2 years. And as that happens, we think there's a good possibility of stock doubling from here. It's a, downside is limited, upside is good. And that is what we like. Same thing we used to say in Laura, same thing we used to say in Aditya Birla Capital. So we think it's a good thing, but I know we are in minority. Many company people don't like it, but so was the case with Lawrence and Aditya Birla Capital. So I would assume that there's a good risk reward here. If our hypothesis turns out to be true, then we will make money. If it doesn't turn out to be true, then we'll not lose much money. So that's the perspective here. Uh, th- and we were business performance of Edelweiss. I think it's doing fine. The value unlocking thesis still holds as and when the EAAA go public. So let's wait for that. Why don't we book profits when can rather than holding? I think as strategy we are not booking enough. Well, it's a call which one has to take based on the business cycle. You know, you don't want to kind of sell your winners early. To give an again example, when we bought Loras at 300 rupees, there was an equally good temptation to book profit at 600, 700, 800, 900, and every time we got a temptation, we visited our thesis and got it separate. Sometimes you don't want to sell your winners, and it happens that you will see a drawdown in your stocks. But if you're convinced about it, then you should continue to hold because selling your winner early is also equally, or in fact worse mistake than they're not booking losses. So I would say that we are trying to do our best to not and sometimes things can change. Even in like I was explaining you that Aditya Birla Capital came down from 225 to 150 and nothing has changed, stock is to 360. Now, in this process, if you end up, I mean, we had no way to figure out to sell at 225 and buy at 150. So idea is to, study business, stay put for long term, take 3 to 5 year, 10-year view. And when business changes, that time you sell. That is our approach. Any takes on sector where government is trying to protect by anti-dumping like steel related products, metal pipe? What is your opinion expecting sector when we see competition in China? So again, this lot of these kind of things will happen. Generally we don't, invest into steel and all, but if there's any change happen in the policy, we will take into account and implement. But uh, you know, com competition from China has come in some of the sectors like chemicals and all, and which is the reason they've underperformed. Sometimes, change in policy can impact your performance, but by and large, we think that government intention is very well in place to boost manufacturing in India. They are very clear about it. And broadly, as long as you have that trend in place, some intermittent changes, you will have to play it out. You'll have to kind of see. As small caps still hold significant amount of premium in the comparison to 1 year forward PV, if broader market sees one more year of consolidation? How do you see especially? So I think it could possible that might see consolidation one more year. Like I don't know, nobody has a way of figuring out whether you will see or not. All we can do is probabilities. We think there's a good probability of recovering from here. Earning growth is happening in them. Some of them are looking interesting. So hence, we think there's a good probability. But it is very much you should be prepared that you can have no return in the next 6 months also. But that does not mean that it's a bad investment. Sometimes no return can quickly turn into good return. We have seen this multiple times in the past. PCPL views. PCPL, we bought at 100 rupees, went as high as 500 and now has corrected after that acquisition. We had booked some part of the profit at high and kept half position. Maybe in hindsight, it was a mistake. So as now they have digested in meanwhile, the carbon black cycle kind of slowed down, which is now beginning to kind of pick up. And they have also digested the acquisition. So we hope that now it will recover from it. We are monitoring the company right now. Valuations have corrected. So we think that, from here, selling does not make sense and we will be holding, as we see the improvement of the business. Meanwhile, somebody can ask me questions from on, window. The next, I can just take some question.
Akash, you can go ahead.
Yeah. We don't generally invest into metals. We do mostly value-added companies. So we're trying to kind of, uh, so generally we don't do. Uh, So Bharat Amritkal and compounder PMS, they are similar. There is not much different. You're right, other than maybe some unlisted. So generally, people who prefer PMS comes into compounder, and generally who prefer AIF comes into Bharat Amritkal. That is how our positioning also. The reason we launched AIF, our earlier AIF, compounder AIF was a closed-ended AIF. Hence, we could not have taken money in that. Hence, we had to launch a new AIF. Hence, we launched it, Bharat Amritkal. But you're right, both are no different. You can choose any. Uh, why don't we invest internationally? We think it's an unnecessary distraction. Korea, Taiwan, all of them are up. But, I wish, anybody had any way to figure out which year, which markets will go up. For that, you have to be either a magician or a global expert, which we are not. And also, we are convinced that it's like this, that if rather than getting a Taiwan call right, if I get a stock call right, which is up 70%, that would be far more easier. Generally, a lot of people, advise that you do this diversification globally. According to me, best market over next 10 years is India. And we should do what we understand. Even if I diversified 5-10% of my portfolio, it is unlikely to have any impact on my portfolio. People have been investing into China since 2017. Now, over last 9-10 years, it has been hardly any return. Now, whereas India has done very well. So we think that this whole international diversification is a more distraction than anything else, and hence we have not, sort of done. Uh, we have not done, and we don't have any immediate plan to do anything like that. Uh, Cryzak story done. Cryzak story just started, not done. It's a very long, very good story, very good management, especially in the education platform space. We remain quite positive on that. It is just even started. I think it's a long way to go. Uh, Should I invest more in shift or compounder? Look, we are neutral to it. I would assume you can. I have given enough explanation. Now you can take a call based on that. If you want a multi-cap exposure, you can come into compounder. But if otherwise, you can double down on shift as well. New age company you find promising. We have taken. We bought Paytm and we bought Urban Company. These are two companies we have in our portfolio right now. Is your process what triggers a reduction in or exit from a high conviction holding? So there are four situations when we sell. Number one, when we think our original hypothesis, was erroneous, galti ho gaya, then we'll sell. Second, when we find our original investment hypothesis, something materially is changed, so hence we kind of exit. Third, our original investment hypothesis fully played out. So if the stock has done well and we think there's no more juice left in holding and growth is fully factored in, that time we'll sell. And fourth, when we find a better idea than something existing in our portfolio, that time we switch. So these are the only four times when we switch. High conviction holding we sell only either they become very large part of our portfolio or we think that growth is kind of more or less played out and you don't need to remain invested anymore. So like ICICI Bank when we started in 2019 at 280 rupees, it became very large part of portfolio at one point, I think 12-13%, and then we brought it down over a period of time, slowly to 5%, but still we own them, right? What's the probability that we have second consecutive year of negative return? It is quite possible. I would say there's low probability, but it is not that there's zero probability. So keep that in mind, but it is a low probability, definitely, I would say. Uh, with the world after 2 decades of free trade and negotiations, now are we seeing legal as restricted? Should the risk of premium not come down? So again, yes and no, because last 2 decades, India had a huge structural weaknesses which India has repaired. So India is the only country with a structural repair, sustainable growth, and more importantly, India's cost of capital has structurally come down. Historically, we operated a very high cost of capital environment. Today, the difference between 10-year US and 10-year India has come down from almost 5% to 1.5%. Right? That's because of the structural repair of India. And if you see in investing, when you look at a DCF valuation, a 2% drop in the discounting rate changes the equity valuation by 35%. That is the re-rating cost. So I think even if you assume that risks have gone up, India's case for re-rating is quite fine because we are the only economy in the world with a sustainable growth expectation of between 6 to 7%, which is kind of not visible anywhere, and you know that growth gets a premium. So you put discount because of the uncertainty, but also give premium. So hence, I don't think India will. In fact, I have a view that in next 5, 7, 10 years, there's a good chance that India might get re-rated further. In nominal GDP falling, a significant concern for corporate earning, and how about doubt that authenticity? See, look, and I would request everybody to stop, doubting this authenticity thing and all those things. These are all good, arguments. I don't think, and at least people in this country should believe this country. I find it very, upsetting when people doubt. Are you saying government is kind of every quarter changing the data? These are, I know I find it very, very, amused that people still have that. If you're following the same methodology every quarter after quarter, when the number comes out good, you doubt the data, and when the number comes out bad, you criticize that government is doing nothing. And that's a very, in my opinion, a myopic way of looking at. Yes, I think nominal GDP falling is not a concern because that inflation which has come down is partly because of GST. And I think we will get back to 3-4% inflation, which is basically sustainable in India and which will remain, I feel. Uh, I've spoken about market valuation. Aditya Birla Capital, I said, I think I've spoken about when we sell. So we have pared a bit of our Aditya Birla Capital from 12% to, I think, 9.5%. We are still seeing the good growth coming in the business. So we will ride it out as much as we can. Recently at 360 rupees, a lot of marquee investors have bought based on the conviction. So if we are already holding with us and business is growing well, why would we sell? Of course, we paired it to just manage risk from 12% to 9.5%, but that will continue depending on our view on market and other opportunities. Manufacturing sector, Shubham, we are positive. Generally, I've not seen today WPI data, but generally speaking, PMI data has been good. We think manufacturing investment cycle is continuing, so we are not negative. Auto sector, auto ancillary, we are quite positive. We have seen PV cycle playing out. Now CV cycle has picked up. Last 2 months, CV numbers have been coming around positive, and even if it is still below the pre-COVID cycle, so we think that's a good news and good cycle. So we have played Tata Motors and some of the auto ends in that. We don't have investment in power sector. We do own BHEL and Kalpataru Power, which are both in power sector. Why we are so bullish on NBFCs? We are bullish because in a falling interest rate scenario, NBFCs tend to do well. Their ability to benefit from that cycle is very good, and hence we've been playing that. Large capex announcement in thermal renewable transmission. How do you assess the risk of overcapacity? Thermal announcement, by the time it comes, it takes 5 to 7 years. So I think still, India, in fact, is staring at a shortage of power, sustainable power, 24/7 power, which renewable can't meet. So hence, a lot of investment is happening in battery storage and thermal. So still, I think we're far away from overcapacity. It's quite away, at least 5 years away, in my opinion. Uh, Debasement of USD, it is a big trend. I think that's the reason Trump is kind of engaged in the war. War, military are the tools to keep US relevant and USD relevant. And whether it will win or not, only time will say. But no currency get debased overnight. It happens over 10 year, 20 year. When when UK was losing power to US, the British pound lost relevance over 20 years. It didn't happen over 1 year. So, this global shift in power never happens in one day. So, this rather than over worrying about this whole USD debasement, I think we should just focus on, we are Indians, we have our exposure in Indian rupee, and, we should focus on making money in India. That is my at least approach. I'm an investor in Amritkal fund. Will you recommend shift? I think see Amritkal also has a 50% exposure to mid and small cap, so I would not recommend. In fact, you can top up rather than opening a new account. I would say that's a smart strategy to that. US India trade deal. I have no view on the timing. Anytime it can happen. Who knows? But I guess should happen soon. I would assign a good probability of happening. In next 3 to 4 months. But look, these are the geopolitical situation. Who knows? Um, Overlap between Bharat and Tatkal and compounder is almost 80-90%. So, like I said, it's a pretty much similar strategy. I'm just avoiding a lot of repetitive questions. Give my view on IT companies, Mr. Daga, but if you disagree, that's fine. It's not running off of a better idea. There are smaller companies that are growing at 20%. So every time, we don't have when Indian IT companies were growing, we were comparing with US IT companies. Every country has its own strength and weaknesses. They are playing on our strength. Some of the Indian IT companies are doing fairly well. So I would say that and does not mean that all of them are doing well. Our job is to identify company which we think will do well. Indian pharma will believe benefit from falling. So we like Indian pharma companies, there's no doubt on that, but each company has own nuances. So you can't really, just take, generally, because each company has a product portfolio. You have to study them and then take a call. Cipla, we used to own, we I think recently sold. Zydus is a good company. So all those things are, pharma sector, we've been positive in general. It'd be hard for me to comment on each name, but in general, we are positive. What is the thesis in LG Electronics? LG Electronics basically in consumer durable only company which has a very wide product portfolio. So the way I feel is that it is a Hindustan Unilever of consumer durable. There's no company, other companies have किसी का खाली refrigerator है, किसी का खाली air conditioner है, this company has a huge portfolio in durables from TV to whatever. I mean, all we need in the household. So I think in that sense, and the reasonable valuation as compared to all other companies, market leadership status, good ROE, ROC profile. So hence we think that is a stable compounder in our portfolio. So would shift strategy include other sector apart from manufacturing IT, which is what I said today on the call that we are communicating to investors also that we will be including other shifts. Does not mean that we have to have it, but at least we will remove our instruction to include other shift where we think that we can make find good ideas to invest. But they have to be structured in nature. Otherwise, it's not that we will say next 3 months this stock looks good, let's buy. The thesis, philosophy, approach remains same, and then only we will do that. Yeah. Finding multi-bagger is not an issue. Holding it when it is by 50% down by 50. Wondering whether you have any stop loss for long-term investment. If you like to consider one factor to set stop loss, would it be based on reducing earning or stop? So I think our stop loss is very much dependent on the business rather than price. And I'll give you a classic example. We had bought Newland Laboratories at 1800 rupees, and 2 quarters went by, earnings did not come, market was disappointed, stock went down to 1,000 rupees. And we reevaluated the company and we found that the business was fine, but just 2 quarters were getting delayed and business was on way to come. And hence we did not sell. And in fact, when the stock moved up, we bought it 1,400 more. And today the stock is 15,000 rupees, right? So, very often only stock price does not necessarily is a reason. But yes, we take stock price as a feedback whether there is to review whether there is a fundamental change which has happened in the business or not. So whenever there's a big drop in the price, we review the stock critically and then come back and take a call whether we should hold or sell. Also, I should I do? Thank you, Raji, for the suggestion. What do you think of consumption, especially FMCG? FMCG, we don't like much because I think given the valuation growth is only single digit to early, but the valuations are very, very expensive. That's when we prefer consumer durables like LG Electronics, where the growth is at least high and the valuations are cheaper than that. So hence we would we have not bought much staple except for one company, I guess. Um, Tata Motor Rational is more CV cycle pickup, and it's we like the Iveco acquisition also. India debt to GDP is 80%. Economics are arguing, but cut capex would. I don't think anybody is arguing to cut capex. I think everybody is encouraging to increase the capex. EPC business are well placed. Companies are doing well. Markets don't like them, unfortunately. Hence, they are cheap. But I'm sure some point in time there's a good opportunity out there. We are actively considering some of them. Contra strategy will continue to do well, but don't expect the past return. Our target returns are 12 to 15%. And that I think you should achieve. Um, uh, there are lots of. I think I've pretty much taken the lots of questions, but are there? I can take one or two questions from the if there. Krishnan, if you have Krishnan, if you have any question, I can take from raise the hand or otherwise. KPIT Kirloskar, we are positive because it's a play on the cycle. I'm assuming you are asking that. So yeah, Krishna.
हेलो सर, नमस्कार सर। मेरे पास जून 2024 से शिफ्ट स्ट्रेटजी है जो मैंने प्रीवियस में इन्वेस्ट किया था। तो इसके बारे में ये पूछ रहा था, आपका मैंने जी बिजनेस पे इंटरव्यू देखा था अभी परसों कल, तो जिसमें आप फाइनेंशियल पे बहुत बुलिश हैं। तो क्या आप इंटरनली शिफ्ट कर देते हैं या हमें गाइड करें भी हम इसको शिफ्ट को कहीं स्विच करें या कुछ करें इसको, या आप उसके अंदर ऐड करें कुछ फाइनेंशियल्स?
सर दैट्स व्हाई आई वाज सेइंग कि हमने वो मैंडेट में थोड़ा चेंज करना वो करेंगे। ओवर नेक्स्ट 3-4 मंथ्स वी विल चेंज व्हाटएवर चेंजेस वी विल डू इन द निकालना वो हम करेंगे सर।
क्योंकि शिफ्ट ने 18 महीने में सर 13% का नेगेटिव रिटर्न दिया है इसने कंपैरेटिवली बेंचमार्क से, तो काफी अंडर परफॉर्म किया है इसने। तो आप गाइड करें भी किसी और में स्विच करें या मतलब इसी को एज इट इज मेंटेन करें, वो आप ही बताओगे।
ठीक एज इट इज मेंटेन जैसे मैंने बताया कि मेंटेन कर सकते हैं। कि स्मॉल मिड कैप है तो जैसे कि मैंने उसको BSE 500 के अलावा ज्यादा परफॉर्मेंस दिखता है। पर अगर मिड स्मॉल कैप देखेंगे तो ज्यादा नहीं है, बट फिर भी उससे फर्क नहीं पड़ता है। हम इसमें जो भी हमको करना होगा हम चेंज करेंगे। वो हमारी जवाबदारी है, इसीलिए मैंने बताया कि हम इसमें मैंडेट को ब्रॉडन कर रहे हैं।
सर एक और जनरल क्वेश्चन था एक, जैसे पहले क्राइसिस जब आई, लेमन क्राइसिस हुआ या कोविड इम्पैक्ट आया जब, तो ऑल ओवर वर्ल्ड मार्केट डाउन गए, तो जब रिकवर किए तो इंडिया भी रिकवर किया। आज के सिनेरियो में ये है कि वर्ल्ड तो ग्रो कर रहा है लेकिन सिर्फ इंडिया डाउन है।
तो खाली एक ही साल हुआ है सर।
हाँ
तो
अभी
ये तो
साल पे साल। जी जी।
अगर आप 21, 22, 23, 24 देखोगे तो वर्ल्ड वाज डाउन, इंडिया वाज अप।
ठीक है।
तो वो तो ऐसा होगा ना सर कि एक साथ तो सब नहीं होगा ना, कि भाई
ठीक।
हमेशा ऐसा नहीं हो सकता ना कि आप ही अच्छा करोगे और बाकी सब कभी नहीं करें, तो उनका कभी ना कभी बाउंस तो होगा ना।
ठीक है।
हाँ सर। Ashish, I'll just take probably one or two questions because I've taken so many questions. So anything else? Ashish,
Hello, sir. Yeah, sir, I want to ask about data center sector, especially like majority of the stocks are trading on higher side of their valuations. And I am able to see like you're holding one of the stock from the same sector called Unified Data Tech. So can you please elaborate a little more?
sector is very good. I think it's just that you have to identify the company and investable, so you have to see the right valuation to invest into that. That's it. But sector is good. Mr. Man Ashur.
Hi, sir. Sir, actually, as the shift portfolio is more or less based on the manufacturing in India, right? So what we have been observing for quite a while is that the European formulators of aroma chemicals, those guys have been debt laden for quite a while, and that is causing their intermediate supply chain to shift to India. And some of the technological advancement is also helping or assisting the same. So, how do you see that supply chain moving? And do you see that intermediates will be the one who will be possibly benefiting out of them, or do you see the formulators that will be competing the European counterparts that will be benefiting?
I don't have a specific view on aroma as a segment, so I can't comment on that. I think I'm sure I will start tracking, but I don't have a specific view to give you a very deep inside view on that.
Got it. Got it. And sir, last question is that do you see any upcoming CV cycle as a large, the upcoming CV cycle is largely the replacement cycle, similar to 2022 as a pent-up demand, or do you see this time it as a more structural leg, specifically in LCV segment, considering the freight rates coming back to the place it was supposed to be?
So I think CV cycle is both combination of replacement as well as a new demand. As economic grows, you have the new growth also. It's a combination of both.
Got it. Thank you.
Yeah. So I think Shriram, last question. I think we'll take the last question.
Uh, Sir, what is your view on gold and silver? They
I
rallied so
said
much.
that I think I don't have a specific view. I'm not expert on gold and silver, but all I can say that typically gold and silver goes up in a spurt. So they remain flat for 3, 4 years and then suddenly go up and then again remain flat. It really depends on how geopolitical situation plays out. If geopolitical situation worsens, it might still do well. But if it settles down, then it might correct. So, but I don't have a strong view. I would say after such a run, probably the best part is behind. Last 10-15% might be left, but or maybe look, take my view with a pinch of salt, but I would believe that last view is more or less last part of the return is behind us. Thank you very much, everyone, for joining us today. It was, quite engaging. Like every quarter, I enjoy doing this. Look forward for our next quarter very soon. Thank you very much.